Yeah, so the energy transition is a very big undertaking, quite frankly, and we can see, including in the current energy prices, how much work is still needed on this. So there is room for a number of big players in Europe. Clearly, our strategy is very clear. You know, we decided very early to get out of coal completely. We have announced a net zero target by 2045. All our capital allocation is aligned to that, and that's really what we're working on, is making sure that whatever we do now is completely aligned to that. Aligned, by the way, to the COP21 targets of Paris that, of course, are trying, that the governments are trying to confirm now at the COP26. So we're aligned to this, and it creates this whole shift creates a lot of opportunities for Engie that we're going after, at pace.
As I look through your earnings, do you want to just comment on the performance in the renewables, what type of marketplace you are looking at with very strong demand and, of course, soaring energy prices for traditional products in the marketplace?
Yeah, so we had very strong results that we have presented 2 days ago. In fact, we were able to upgrade our guidance second time this year. We are very much supported, of course, by a tailwind here of very favorable market conditions, but it's also combined with a lot of work that has happened on our own production capabilities, and we're at record availability rates of our generation businesses, I should say. Obviously, there's renewables in there, but also our thermal and nuclear businesses are performing extremely well. So for us, very pleased, of course, to be able to upgrade the guidance. We posted 50% plus growth at the third quarter year to date, which is a huge step forward, of course, and again, gives us a lot of tailwind and the certainty and the confidence to be able to invest massively into the areas that I've mentioned earlier.
Judith, do you think that the arm of the state is too large here when it comes to intervention? I'm just looking at, those moves by the French government to try and put a tariff suspension on here, a tariff freeze for business to customers, B2C customers rather. What you had then, an intervention perhaps maybe to provide some support to industry. Would it just be better if the French government stepped back and let market forces play out here?
Yes, of course, as a company, we're obviously a big believer to have market forces work themselves out. But I do understand, of course, the discussion here, because you have seen energy prices going up very, very significantly. None of us have ever seen this kind of increase in such a short period of time. So completely understood from our side as well that the French government wanted to step in to really support also the individuals like you and I, basically out there, who are buying energy every day. And so what they've put in place, so it's very constructive changes. Obviously, it still needs to be voted, but it does look very constructive to us in terms of really, putting basically a freeze now, but then accepting a slightly higher price for the end consumer when prices will go down, because they will normalize over time. And so for us, quite frankly, we're being kept whole, which is great. There will be some timing shift, but no impact on our 2021 P&L or 22 for that matter. And then we're still working out on a cash flow basis, but there will be a slight shift. But quite frankly, I think this is a good outcome. It's good for the end consumer, given it takes off some of this big fluctuation. And as an energy company, we're being kept whole, so that's obviously very important to us.